What if I told you that the thing that made me profitable was just a few tweaks to my risk management and my ability to manage my trades? I'm going to show you what I did and how right now. Risk management is a dynamic thing. It is not just you will do this one thing and it's just going to be you're going to risk 1% on every trade and then you're going to be a profitable trader because you have good risk management. It's just not how it works. There are certain stages that you have to go through of your trading career or your trading journey that are going to lead you into a more advanced style of risk management. Now, in the beginning, I do agree that you should be risking as little as possible, and I would say going as low as 0.25% would be normal and acceptable. However, as you begin to progress, you can risk up to a certain amount that you're comfortable with. Also, risk management is not to be taken at face value. Like I said, it's dynamic. You have to be able to adapt. You have to be able to adjust. And you need to, more importantly, learn things about yourself and the process and mastering the process and a little bit about psychology, because all of those things go into risk management probably more than you expect. Failing to plan is planning to fail. And up on the screen, I actually have a trading plan that you can use to develop your own trade plan. Think of a trade plan as like a complex diet. If it's too complex, you won't follow it. However, if it's too simple, you won't know what to do. So the key with your trade plan is make it complex enough or detailed enough that you know exactly what to do for each trade setup that you plan on taking, but not so complex that you don't follow the plan. Some of those details that should go into your trading plan are your trade setup. You should have all of your setups listed, and then you should have what quality of setup is it. You could have a tier system. You could have maybe a 1-star, 2-star, 3-star, or maybe a 1-star, 3-star, 5-star, or maybe some kind of way of identifying a better quality or a low quality setup. You should have how much you're willing to risk on that setup or on that quality of trade. So like my best quality trades, I might be willing to risk a little bit more if I'm in that stage of my trading journey. Now, as a beginner, like I said, I would highly suggest just risking as little as possible. You should also know how many pips you're willing to risk per trade setup. For me, I usually risk on currency pairs between 2 and 15 pips. On oil, index, and gold, I will not risk more than between 20 and 25 pips, and usually I won't go less than 10 pips. You should also know what your potential risk to reward should be on that setup, and usually the risk to reward is going to be the thing that creates an environment for that setup to be a higher quality, if you will. So for example, I have 1 to 5 risk to reward or greater. That's just an example of maybe a really great, high quality setup. And then you have 1 to 2, maybe a 1 to 1, just as a scalp down here at the bottom as a tier 3. Now, this is still a high quality. It's still a high probability setup. You've just identified it as something that's not going to go as far as everything listed up here in the green. You should have a break-even plan as well as an exit plan. And for example, this break-even plan would be like your second break of structure. So they break structure once, they pull back, they break again, and then I would go to break-even. Or you could have a risk to reward based break-even plan, or even a pips and profit break-even plan. For exits, you're looking for, what are you going to do? What's the plan to get out of that market? Are you going to take profits in a certain area of the chart? And once you get there, how much are you going to take? Are you just going to take everything out? Are you going to scale out? How are you going to exit that market? In this example, you see I have a 1 to 5 risk to reward. I plan on taking 80%, or if I'm at 100 pips, taking that 80% off. And then I'm going to trail stops aggressively. That's just one example of an exit plan that you could have. As a beginner, you should never be focused on money. It's not about the money. As a trader, you should never be focused on money. From start to finish, from the beginning of your journey until the day you stop trading, only thing you should be focused on is the process. The process, the process, the process. And that used to infuriate me to hear those words. But let me explain. If you can master the process and becoming a good trader, the money is secondary. It will follow without you even thinking about it, without you even trying, a result of being a good trader. So as a beginner, do not focus on P&L. You should be looking to improve the following. You should be looking to try and trade without emotion. You should be journaling daily. Were you emotional that day at all. Be honest. You should be mastering levels, timings, price action, pattern recognition, setup identification, pair selection, and yourself. You want to master yourself. Trading will teach you so many things about yourself. Sometimes you have to really do a deep dive into your own personal life to figure out what is wrong with you. I had to do the same thing. I had to figure out, why am I continuously making these irrational decisions and allowing myself to have these self-sabotaging behaviors that are not allowing me to be successful. I've spent so much time self-reflecting, I don't even know how to begin to tell you how many hours. You should be on a demo account, and a really important tip to have is that on that demo account, you should still be risking less than 0.25% or less than 0.5% or just as little as you possibly can, because it's about the process. There's nothing sexy about not making a lot of money, but there is something great about mastering the process. You should make an emotional attachment to your demo account. Make it as realistic as possible. You can set up a challenge for yourself, like I did, to be profitable for 2 to 3 months. If you screw up and you lose maybe 5 to 10% in a day, or you lose a bunch in a day, or you take too many trades in a day, maybe you overtraded, maybe you did something crazy that was detrimental to your account or horrible for your account, then you have to start back over at day one. If you are 2 months into a 3-month challenge and you mess up, go back to day one. That will create an attachment to your demo account and make you want to be better, instead of screwing up constantly and forcing yourself to have to keep starting over on that demo account. You should develop a mindset that is more business. It is not about becoming rich quickly. Trading is definitely not a get rich quick. It is actually a get poor quick. The better you are at trading, like I said, money will follow. Over-risking. This is a big one. Over-risking will not make you more money. Over-risking will make you lose more money more quickly. Do not focus on your P&L, focus on percents. Percentage can carry over from whatever account size you have right now until forever. 1% of $1 is still 1%. 1% of $1 million is still 1%. As human beings, we have grown to have some kind of emotional attachment to money. Whenever we see a certain number pop up on that screen, without you even realizing it, or maybe you do, there's an attachment to that number. Your heart rate starts to increase. You start to not think clearly. However, whenever I see 1% loss or gain up on the screen, I literally feel nothing. And that's how it should be. Just real quick, I want to let you all know that the link to my Discord is down in the description below. It's free to join. Tons of information over there on those channels, as well as, if you would like to, a week-long webinar that I run every single week, and I only have 2 more of them this entire year. I accept about 5 to 10 people per webinar, and there are a few spots left. If you would like to join, hit that link in the description and contact me over on Discord. Congratulations, you have made it to becoming an intermediate trader. You've maybe not mastered all of the skills from the previous slide, but you have greatly improved on them. And you're better at identifying trades, better at executing, but you're still struggling with something. Something is there that just feels like it's missing. You're just keeping you at break even, or maybe slightly above, or maybe slightly below. You know, you're not having any of those big dips in P&L anymore. Your curve is kind of just maybe flatline. But at this point in your trading career, you should be able to start practicing or having better trade plan practices. You should be able to start increasing risk slightly and taking your trading to the next level. From this point, you have good setups and you're really good at identifying them and actually executing them. You have a process for those. You know exactly what to look for. So now you're allowed to risk maybe 1 to 2% on your best quality setups. On your mid-grade setups, you should be risking maybe 0.5% to 1%. And then on low-grade setups, not exceeding 0.5%, but you still want to be in that 0.25% to 0.5% range. Now, what is this going to do for you? It's going to help you to develop discipline. And it's really going to help you get used to seeing different risk parameters up on the screen, as well as practicing those risk parameters, identifying which setup goes where. Is it a high quality setup? Is it a scalp? Am I risking 1%? Am I risking 0.5%? Or why? The jump from intermediate to advanced is the biggest one that you will make, because at this point, you feel like you have mastered yourself. You have really become in tune with who you are as a person and who you are as a trader and what has been holding you back. Your P&L curve should have a good uptrend to it. There should not be huge dips. It should just be gradually going to the upside. You should feel absolutely nothing, whether you're in the trade or afterwards, win or lose. It should just be another day at the office. It should be a complete business mindset. You should have passed your demo account challenge and feel like you are ready for the next step to start trading with live funds. The thought of risking more should not excite you at all. You're only risking more now because you believe you have perfected the process and are ready to begin the next phase of your trading. That is very, very, very important. The next important thing that I need to say before even talking about the risk parameters is just because you are now allowing yourself to risk more does not mean that you just start risking 5% on every single trade. Absolutely not. You need to have some kind of trading maturity and realize that just because it is a high probability 90-10 setup, that not every trade is going to go as far as expected. A high grade setup has certain risk to reward expectations, and that is the reason for risking more on that trade. Whereas a low grade, and I'm only risking up to 1% on those trades, I expect it to not go as far. Maybe I'm only getting a 1-to-1 or 1-to-2 risk to reward. So therefore, I have lower risk parameters for that trade. On a high grade setup, you could call that a tier 3. You could call that a 5-star. You could call it a whatever you want to call it. I'm going to be willing to risk a bit more. Same for mid-grade. I would knock it down just a little bit to a lower percent. And then, of course, like I said, the low grade, I'm risking the least. At the beginning of this video, I told you that I not only made some adjustments to my risk management, but also my trade management plan that has allowed me to become a profitable trader. And I truly meant that. Without a good way of managing your trades, there's going to be a lot of times where the trade starts to go in your favor and you feel like, hey, this is going to go maybe 1-to-5, 1-to-4, 1-to-3, whatever. But because of the behavior of price and because of your trading plan, you've gone to break even. Or maybe some other behavior price action pattern has formed at a certain level that leads you to believe that you're wrong and you're up maybe a certain risk to reward. Maybe you're up 1-to-1 or 1-to-2. You just have to cut the trade and have the maturity and the knowledge and the experience to be able to do that. In this next segment, I'm going to show you some of the things that I look for and some of the things that have allowed me to win a lot of losing trades. The winning of all of those losing trades is a huge contribution to what I believe is my success. One of the first things I taught myself how to do was how to scale into a position. One of my biggest triggers to put me into tilt used to be when I would enter in at maybe a 0.5% or a 1% risk or a 2% risk or whatever I was risking on that trade. And the next candle would come up and just go straight against me and stop me out. That was infuriating. And I'm sure that some of you can probably relate to that. So now what I do is I have a very systematic way of adding into trades, starting off with very low risk and then slowly adding in, or sometimes rapidly adding in, as the trade accelerates in my favor. So scaling in is the process of building a position and multiple entries, adding up to the max risk you are willing to risk on that trade. Now, an important note is as I'm adding into these trades, my stop loss is going to remain in the same place. So as I'm adding, I need to realize that those adds, I need to reduce the position size in order to only get up to a certain risk parameter, because obviously as the market moves in my favor, I'm further away from where that stop loss is going to have to go, and I need to size my positions accordingly. Now, like I said, this is a systematic way of doing things, and I only add to my position as it goes in my direction. So a lot of times what I'll do is I will either use buy or sell stops to add into that position as it breaks further in my direction, or I will buy or sell the close of candles. Up here on the screen, you can see kind of an example of what I'm talking about, where on this trade example, you had a break-in structure and 3 pushes and an area where I would have entered that market. You have a bit of an M here. They broke down, and that's the first place where I would, add into that position or enter into that market. I would put my stop somewhere up here, and then I would look to add as it is falling in my direction. All right, now that is scaling in. Scaling in and pyramiding are two very different things. A lot of people will tell you that you want to maximize your wins and reduce risk or make your losses as small as possible. However, they tend to fail to tell you exactly how to do those things. The way that I personally do that is by something that I call pyramiding. Now, the act of scaling in allows me to mitigate a lot of risk, because like I said, if I were to get in and this were to immediately go back up and stop me out, it would stop me out for a lot less than if I entered in at full size. Additionally to that, Another way that I try to manage my risk on a position is if it starts to go against me, I use a trade management tool to start closing my position well before it gets to my stop loss. Usually what I do is about halfway to my stop, I will start closing half of my position. And as it barrels closer to my stop loss, I will continue to close half till it gets there in order to try and make that loss as small as possible. Now, I don't care. If it gets halfway to my stop loss, I do not care what it looks like. I'm closing half. That's all there is to it, because there is a possibility that that trade is not going in my direction. The possibility of it hitting my stop loss is enough for me to want to reduce risk. On the opposite side of that, how do I make my win as big as possible? The scaling in and then the pyramiding. Pyramiding is where you start to get into really big gains on your account. This is going to be on very strong moving days and where you're looking to get in on the first bounce. How do I pyramid into a position? What is pyramiding into a position? Now, you can imagine that I've added in up until this point and the market has gone back into consolidation, and you can see a bit of a 3-push pattern back up and a descending triangle down. That might be good enough for me to add into this position. However, there is something that I must do first. I must take all of these positions and wherever my average entry is, so let's just say my average is right here, I must go to break even. I must be at break even before I start adding any more positions to my trade. Because what I'm trying to do is I am trying to add in positions without adding in any risk at all. So if I'm at break even, I need to smartly and intelligently add in position sizes that will not move my average price down too far, or if I was going the other way, up too far. So that way I don't get stopped out of a winning trade. So what I'll do is whatever my average is up here, or whatever weight that I have up here, I will usually have that in my entries in the pyramid, because I want this to continue going in my direction without stop hunting up, hitting my stop loss at break even, and then continuing, basically leaving me in the dust. So as it's falling, I will pyramid in further at break even, move my my stops down with my average, making sure that every time I enter in, I am having that position. So let's say that I enter in right here with 1 lot, I would enter in with half and then a quarter as it's falling in my direction. Now, my exits is something that I consider to be extremely conservative. I am not somebody who is on every trade that I take looking to get 100 pips or 200 pips or 300 pips or something like that. I search for the best risk to reward opportunities and exiting on the chart at the smartest possible point that I believe to be the most intelligent. There are some certain levels that I will look for in order to make those decisions. I will look for, 1, a certain risk to reward. If I am up the risk to reward based off my trading plan that I'm supposed to be up, I will just close the trade and I'll be happy with that and I'll go about my day. If I am looking to the left and I'm seeing on the 1-minute chart there are some swings in a certain area of the chart, or where I believe that the pump began or the dump began, I will take profits in those areas. Or if we slam through a certain level and then it immediately goes into consolidation and it looks like it's going to reverse, I will start taking profits, maybe not closing the entire position, but at least removing some profits or locking something in, so that way if it does reverse and stop me out at break even or at a small loss, I will have at least locked in something, either 25 or 50% of that position, and maybe looking for re-entry opportunities. I will use the 100 pip box using the quarter levels, the double zeros. We've got all the quarter levels in here, and then we've got double zeros making that 100 pip box. If I see a 25 pip box and we're moving aggressively through it, maybe I'll take it at the low of the 100 pip box. Maybe I will be looking for that 100 pip move. However, maybe I'm going to take profits at each 25 pip level. Something like that, just to lock something in. I can also look for range expansions of areas. If I take a high and a low, that's a consolidation. So I'm taking 100% expansions of that consolidation as potential profit targets. Or I'm looking at maybe the 50% zones. You've got 50% of these expansions. You also have a consolidation. You've got a 50%. You can take at the opening range high, opening range low, opening range 50%. Remember that concept of consolidation and the concept of how price moves is fractal. So I'm really just looking for one of those areas in the chart to take profits in. I really care more about risk to reward and locking in profits. Okay, I don't care about being correct about the direction. A lot of my trades, it will get to the level, I'll close the trade, and it will just reverse and go vertical, and I'm like, well, good thing I got out. Because I locked in those profits and most people didn't, and they just got stopped out for nothing, whereas I'm leaving the day in profit. And I think that that is a huge contributing factor to my success. I really hope this video has been of use to someone. If it has, do me a favor, hit that like button, subscribe to the channel if you have not already. I do 2 live streams and a long form content video every single week, and you'll have a wonderful day.